Welcome to my weekly outlook for this week, which is the final week coming up to Christmas, and going to be looking at what markets are doing in front of the Christmas period, and looking at a few factors that could drive your markets in the coming days. Now, looking into this week, what what we have seen is that tax reform remains crucial for this market sentiment. We saw on Friday the fact that tax reform looked to be going through, and subsequently it now looks as though that sentiment has picked up quite sharply. Equity markets are soaring higher in the European session on Monday, and subsequently we've seen a little bit of expectation now on treasury yields, which are beginning to tack higher, and maybe that's going to start to pull a bit of support for the dollar, but it's not by any means a done deal yet. Certainly it looks as though that some of the dissenting voices amongst the Republican senators are sort of beginning to err further more towards the voting for the positive side, but it's not by any means a guarantee. Now, we could see this vote going through as the final reading of the bill in the next day or so, and that would likely to produce a big move, big shift positive in sentiment if that were to be seen, if it does go through. Now, much beyond that, there's not a great deal really to drive the markets into the final week before Christmas. A little bit of current account information there for forex majors perhaps to move on, but other than that, I think it's going to be tax reform dominated pretty much all the way, perhaps with a sprinkling of Brexit, but generally speaking I think tax reform will be mostly key. Now, looking at these forex markets, we've seen a very much more of a range-bound theme coming through, certainly on euro dollar and dollar yen, two of the major markets. And we've seen these markets sort of breaking trend lines left, right and centre. We're seeing them becoming increasingly flat on momentum indicators, on moving averages, and lacking direction generally. It really does need, I think, a fundamental catalyst to really pull these markets in a specific direction. And at the moment, we're not really seeing that, even though we've seen on Friday the sort of expectation increase around tax reform. We're still not seeing the dollar starting to strengthen yet. And the big reason behind that, I think, is the fact that treasury yields are not breaking out. Well, yes, they are on the 2-year, but not on the 10-year. The longer dated treasury yields are still remaining subdued underneath 2.4% on that 10-year treasury yield. I think the longer that continues, the sort of more range bound the dollar is going to become, because it's not really able to see that that the market expectations for inflation and growth in the future years to come are not really pushing forward, and that I think is key for the dollar now, because I think pretty much factored in the rate hike cycle at the moment for the Fed, and need to see growth and inflation expectations increasing in order to drive a sustainable dollar strength move, and at the moment that's just not happening. So we're seeing euro dollar ranging between 17.15 and 18.60 in the last week. You could sort of expand that out to 1960 on the resistance side, but generally speaking, very tight on the range. Similar sort of move on dollar yen between 112 figure, 113 figure, and again you could extend that to 1375 on the upside of resistance, but still not really seeing the sort of market breaking out. We've seen cable, which has corrected back to a key support area, sort of 32 to 33 figure area. Is that a buy zone now? Could be, but I think it's still going to be Brexit factored, and also I think tax reform will have a big part to play potentially going forward. But some key levels still to look at there. In terms of your equity markets, we've seen Wall Street, which is pushed higher, and again, generally speaking, the moves have come on tax reform. The tax reform positive sentiment that we saw on Friday boosted Wall Street to all-time highs again, left key support on the S&P 500, 2,560, and still seems to be that any sort of dips on equities are being bought into. We've seen on Monday morning the DAX breaking out above 13,240. That's a key breakout. If it holds that on a closing basis, opens up the all-time high of 13,525. Will that be seen? I think it would be if tax reform goes through. FTSE 100 is sort of now coming up into a big key resistance area, 7,550 to 7,600. Is that going to break out? I think it does definitely need to have tax reform to really break out. Otherwise, I think we're going to see markets falling back relatively quickly from these levels. In terms of your commodity markets, I think again tax reform is the driver behind whether we see the gold price coming back towards $1,200 in the coming days and weeks. I think that at the moment the breakdown below 1260 is a key move, and it's sort of now buzzing around that old support which becomes new resistance. Big sort of selling opportunity I think between 1260 1270 on gold, but I think it's going to be pushing further down if, and I reiterate that, if we see tax reform going through. Oil price seems to be sort of holding up as support. It's interesting that we're seeing a bit of a triangle consolidation coming through on WTI, bit of a rectangle consolidation on Brent crude as well. So not really sort of selling off. And that's been helped on Friday by the fact that the rig count fell by 4 rigs, but certainly we are seeing that these markets are fairly well consolidating, and I don't really see that there's going to be a major drive higher on oil in the coming days and weeks. So in terms of what we've got to look forward to this week, as I said, a bit of current account data. We've got the US current account, Eurozone and UK. That could certainly have an impact across those forexes for the dollar, the euro and sterling, so watch out for those this week. And also we've got a little bit of final revision on GDP for the States, and that will be interesting whether that is upwardly revised again. Doesn't look like it's expected to at the moment. 3.3% is the Q3 second reading. Are we going to see that revised higher? That could drive a bit of dollar strength if that were to be the case. But generally speaking, we're sort of winding now down into Christmas, and I think it's going to be tax reform driven through this week. So I wish you good luck in your trading, and I'll speak to you next time. Thank you.